Here is my simplest strategy and one of the most profitable ones on the financial markets after 7 years of trading. I'll give you an example of this strategy for scalping, like on the 5-minute chart here. Then I'll give you examples for day trading and swing trading, so that everyone can be satisfied and implement this strategy. First, you need to place this trend line correctly, because if you draw them wrong, you won't be able to implement the strategy. You will get false information, false signals, and fake breakouts. So here, you can see that the trend line, first of all, I don't draw it with just one line, I draw it with 2 lines. Trend lines are diagonal supports and resistances, just like the basic supports and resistances you're used to, which are horizontal like this. Now, secondly, for the trend line to be validated, to be solid, and for you to be able to trust it, you'll need to anchor several touch points. You can see on the downward trend line on the screen that we have several touch points. We have the second point here, a third point here, a fourth here, and the trend reversal zone. So you can sell at the touch points of the trend line, always with signals, of course. Just because the price is approaching the trend line doesn't mean you should sell. You should always have additional signals that indicate the continuation of the trend below the trend line. Or, you can simply wait for the real breakout of the bearish trend line and then take advantage of an upward move. The breakout, well, happens right here. You can see that on the bullish trend line, there are 3 touch points before the market breaks it downward at this spot and then moves a bit lower. So, first of all, remember that a trend line is drawn with 2 lines. And secondly, you need to have several touch points, once, twice, 3 times, 4 times, 5 times, for the trend line to be solid. You need to have at least 2 or 3 touch points for it to be considered valid. Here's another example for this strategy. As you can see here, we're on the 30-minute chart for gold. And same thing as always, we'll start by drawing our trend lines, making sure we have enough market touch points on our trend lines to be able to take them into account. You can see that on the left, on the bearish trend line, we have 3 touch points, and on the right, on the bullish trend line, we have 4. You have the choice to sell when the price returns to the trend line, or to wait for the trend line to break here, then the pullback, and finally the trend reversal, and so buy all the lows here, all the low prices on the bullish trend line. Let's imagine you enter a buy position here. Well, your stop loss will be placed below the lowest point of the last move. For the take profit, you need to wait for the price to break the trend line to the downside here. You never know, when you enter a position, when you buy, for example, here, at what point the price will stop its upward movement. So, the exit signal for this buy here will simply be the break of the trend line at this spot. You have a very tight stop loss for a very high target profit. The risk-reward ratio is excellent with this strategy. One last example for swing traders. This time, we're looking at the S&P 500 on the 4-hour time frame, and as you can see, it's always the same approach. You draw your trend lines like supports and resistances with 2 lines. You make sure there are enough touch points, because simply put, a lot of touch points means that the trend line is being considered by many traders and is being respected. Once it breaks, you'll either need to exit your position, or on the other hand, if you're waiting for the breakout to reverse the trend, then buy. The upward trend line also has enough touch points, as you can see here. On the downward trend line, we have the breakout here, a small upward move, then the pullback to form the start of the new upward trend line. And from there, the buying resumes and you can start buying. And you don't exit your position as long as this beautiful trend line hasn't been broken downward, which would be here. If you enter with strong bullish signals that confirm we're on an upward trend line and about to move higher, then you set your stop loss below the last market low. The risk-reward ratio will once again be excellent. This strategy really isn't any more complicated than that. You can practice on your own charts, on your own time frames. Have fun drawing your trend line and have fun implementing this very simple strategy. As you can see, there are 0 technical indicators, just price action, some thought, and patience. Thank you for your attention. See you tomorrow on the YouTube channel.